So the first 10 minutes here is the Bob and Tom show. We could give a full-week session on the tax issues. Anybody want to join us for that? All right, then we'll keep it to 10 minutes. I got one taker, Chris in the back. Glutton for punishment. All right, so Bob, one of our mutual clients decides they're going to give an interest in OGM property to the Crawford Heritage Foundation. And they're going to give a 5% interest in the property. Do they get a charitable deduction for it?
The answer, of course, is maybe, but way more often than not, the answer is no. Okay, so that's going to be one of your first hurdles here. Okay, there we go. I'll speak a little closer to it. The answer is maybe, but like we talked about, more often than not, probably almost every time, the answer is going to be no. This donor is going to come into you thinking, when I sign on the bottom line, I turn over my 5% interest to you, I've got to get some kind of tax deduction for that. The catch that we run into is whenever anybody makes a contribution of property, in order to get a tax deduction, they have to give away their entire interest in that property, okay? We can give away a 5% undivided interest, take a deduction for that, but the biggest hurdle that we're gonna run into, I think some of the next discussions are going to address that for legal purposes, the surface and the mineral rights are separate assets. Okay, unfortunately, the IRS does not look at it like that. So in order to take a 5% deduction for a property gift to the charity, would have to give away 5% of everything I now and have in the future, which would include 5% of the surface. So most times our donors are not going to be inclined to give away those surface rights. If I only have mineral rights, which sometimes can be the case, and I have to give away 5% of all my mineral rights, any residuals, and like as the previous panelist talks about, there's so many different formations there, I have to give away those interests in every formation. So they're being the biggest hurdle.
All right, but there is a silver lining. So the silver lining is, for the charities in the room, everybody knows in December that Congress made permanent the provision for the IRAs, the charitable gift of an IRA interest. Does the taxpayer who makes the gift of an IRA interest get a charitable deduction? No, they don't. The benefit is they don't recognize it on their 1040. They don't pay tax on it. They don't have to take a deduction for it. In the long run, 900, maybe 990 out of 1,000 donors don't itemize anymore, particularly if they're older and they don't have a big mortgage on their house. So it's very similar to the gifted IRA. You retain your 95%, it goes through your estate, it goes to your loved ones. When the property is drilled, and they had the slides up earlier, you get the $50,000 check for the month. So you get the $2,500 going to go to the charity, the balance is going to go to the non-charitable beneficiaries. You do not get a 1099 for that $2,500. It goes to the charity, so you don't pay tax on it. All right, so Bob, the next question is, and Bob is going to throw this one at me, but I'm going to throw it at him, on the gift tax side. Now, it's going to sound absurd. If you're making a gift to a community foundation, or your church, or you're making the gift to your alma mater, can you imagine that the federal government theoretically might want to charge you a gift tax for that? It doesn't make any sense. But Bob, can you go over that?
They have pretty much the exact same rule for the gift tax structure that they did for the income tax structure. If I give a gift to a charity, but it's a property gift, but I do not give my entire interest, again, all those same rules that we talked about, we theoretically do not get a charitable deduction for that gift. It's very convoluted. If I give regular gifts to my family members and I happen to give $15,000 to a charity that year, technically I'm supposed to report the $15,000 gift to the charity, and then I take a $15,000 charitable deduction. But if I don't gift the entire interest, I'm supposed to pick up the $15,000 gift to the charity as a current year gift, and I get no charitable offset. So that comes into the nature, we may be using up some of our lifetime credit and not getting an offset. But the key is, how much are we really giving away? So I'll turn it back to Tom, who's actually discussed this with the IRS.
Yes. The good news for all the charities in the room is that out of 1,000 people, generally speaking, 1,000 people you'll be soliciting, requesting they consider making a gift of an OGM interest, 998 will not have a federal taxable estate. And this will be, man, the IRS already heard me. They say the federal government isn't listening, huh? Who sent an email on that? You guys already tweeted that out? All right. So 998, actually sounds clear now. 998 are not going to ever pay federal estate taxes. The 2 out of the 998 can be dealt with. They're going to have a large estate, they'll be very wealthy, and they'll be sophisticated. It's not hard to work with. So, in Bob mentioned, Mike Degenhardt's here. We convinced Penn State to go through doing a private letter ruling, and the IRS doesn't like our discussions on for those 2 who have taxable estates. And I asked the chief counsel in Washington, I said, well, are you guys really going to go ahead and assess gift tax for those 2 that have federally taxable estates? And they said, well, we don't see that being a real attractive issue. They wouldn't say they wouldn't. I doubt they're going to be pursuing it aggressively. And for those in the room, for those 2, know that we're planning on an act of Congress, literally, to change the law. So if we ever get we will get a new president, and hopefully somebody in Congress can actually get something done. We're hoping to insert a provision to take care of that for those 2 out of the 1,000 that we have to deal with that issue on. So the good news is that if you have a philanthropic donor and they want to make a gift, there's, generally speaking, no tax impact. They don't have to report anything. They don't have to do anything. If you have donors that you need a gift tax return, all the charities in the room, I will file the first 25 for free. So send them to us. We'll file the gift tax returns for them for free, and it won't be a big deal. Get the gifts. We'll find a way to make the rest of it work on the gift side, on the tax side. So remind them, it's just like those over 70.5 making a gift of their IRA interest. They don't take in the income. They don't get deduction. The same as a charitable gift of the IRA. On the gift tax side, for those 2 people out of 1,000 that are so blessed to have over $10 million estates, we can help them out too. All right. So that covers the gift tax side. There's a whole bunch of recipes that goes into that sausage. All they need to know is the sausage is good and it tastes good. So next we're gonna go into the state law side. One issue. So I was talking with Trent, Bob, and Betsy, and I just met them for the first time, but we spoke on the phone, and I said, geez, I'm just a tax attorney, humble tax attorney. I live in the tax code, and I said, there's this urban legend about OGM interests, and should a charitable organization own an interest? What happens? Isn't this some sort of tainted asset that needs to be dealt with like it's radioactive? And I said, shouldn't we have a separate LLC for the interest? And they said, well, no. So I said, really? Could you guys explain? Tell us about what the charities need to know from the perspective of liability and issues to address state law issues for energy interests.
Thank you.